Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Good afternoon.
Hey, how are you, man?
Good. How's everything with you?
Good. Everything is good. Just watching this tape, not moving, but moving. It's a little bit of like an illusion almost, right?
What do you
an
see?
Illusion. I guess the first thing, just to talk about things that popped up today, the ARCX, the space ETF, that just first day of trading. Look, I mean, some of the stocks are moving up, and I'm sure people invest in it, but we talk about like the SEC. The SEC is in the picture today a little bit because they are because they're not, maybe they didn't know, they didn't understand what's going on with this Archegos incident, which we'll talk about in a second. But ARCX, like they have a bunch of ETFs, and if you look at the top holdings of ARCX, the second biggest holding is one of her other ETFs. So it's just this larger picture of one ETF incorporating another ETF. So if you buy one ETF, you're actually buying another ETF, and that one probably holds another ETF. So the money trickles down and it just keeps building this pot. It feels like there's something wrong there. I'm not sure if there is, but it feels like there is this greater pyramid sort of, the more you market, the more little sectors that you market, you start putting whatever you want in each bucket, and each bucket is feeding off the other bucket. It doesn't feel right. And ultimately, I believe that she's going to have liquidity problems in a downturn. We may not have a downturn ever again, but in a downturn, she might have a liquidity problem, not being able to get out of the positions. And so again, one ETF investing in another ETF, it just goes downhill from there. So that's something to think about. ARCX, first day trading. I'm sure people are excited about the space, and she has a following. Right. So I'm sure that'd do well for maybe a day or two, or a year or 5 years. She likes 5 years. So that's that. The other thing we talked about yesterday, and obviously still going on today, the story is becoming better known out there of maybe what happened, the Archegos incident. I think it's interesting. I think the real question in my mind is whether or not each individual broker knew about the other broker's leverage. Whether each, it's one thing to say, hey, we were doing business with Archegos. He wanted to do this type of size. He's got $10-15 billion. And we didn't know he was using leverage at other brokers, at other prime brokers. So we gave him leverage and we gave him out terms, and we were able to live with that. And it was a private transaction. And maybe there was, if he, I'm sure they asked the question, how much leverage do you have? If he lied, or maybe they don't ask the question, but if he lied, then, there's an element of fraud there. Not that he has any money, but there's an element of fraud. So that's one. That's I think the big question. The next question is, if they didn't know, then maybe the SEC needs to have an open window to understand or know, or what's going on underneath, the Goldman window of prime brokerage window, the UBS window, prime brokerage window. All of these prime brokers should, not that they should be showing it to everyone else, but they should have a top-down look to see how much leverage is in the system, and by who, right? That's a big deal. By who, right? Because if it's one guy that's just going rogue trading because he's, I read on Reddit yesterday, he YOLO'd $15 billion. That's like, when you think about it, that's what he did, right? He basically was like, you know what, 15 billion, roll the dice, get 5-to-1 leverage. I'm just going to buy every one of these crazy names and push it, and then I'll figure out my exit strategy later. That it's dangerous for the market. As you can see, things get crushed
Mhm.
very, very quickly. I think the other interesting part of the story where you might see lawsuits, and I am sure the brokerages who lost out will file or are considering filing right now lawsuits against Goldman Sachs and Morgan Stanley.
Mhm.
Apparently, this guy knew he was in a little bit of trouble, and so stocks were still way up. He invited all of them to talk together, to get in a room and figure out how do we orderly, push down this portfolio or deleverage the portfolio, and it won't hurt anybody. It won't hurt. It'll hurt me, and that's fine. But it's not going to hurt you guys. I'm going to take the loss. I had 15, 20 billion. If I lose 10, fine. Let's just call it, let's pare this down. And you got to picture yourself in that meeting, right? So the prime brokers, the senior guys at each of the banks, they're going to go into this meeting. So imagine you're one of those guys and you walk into this meeting and you hear, oh, how many shares you have? How many shares you have? The minute I hear there's 55 million shares in the room of GSX or 80 million shares of Icon, you know what I'm doing? I'm picking up the phone. Yeah, sell the whole thing. Issue a margin call immediately and sell it. Why? Why would somebody do that? Well, somebody would do that because it becomes game theory. The game theory, they use it in case studies with the cartels. If nobody sells oil, increases the production of oil, then oil will maintain at a steady rate. But if
Mhm.
one person cheats, that person wins, everybody else loses, right? And so this is the same situation. If everybody colludes together and says, okay, we're going to gently, you do a little bit, I do a little bit, we'll do this, and we'll agree to this. Nothing, he would have lost his money. He would have lost 10 billion, and then everybody else, probably is okay. But instead, apparently Goldman and Morgan just literally went rogue and said, screw this. I'm going and, we're selling 40 million here, 30 million here. That was Thursday, Friday. That caused Nomura, CS First Boston, Deutsche, but they were late in the game. Wells Fargo, they're coming in late on Monday going, all right, we got to sell the rest here. And they took the brunt of the losses. Apparently, that's what's, being said. I don't know. I guess the question the lawyers will ask is once they got into that room, when they made that decision to all get into that room, was that a verbally binding, like a contract, a verbal contract? Was it a binding situation that we're all going to open up our books and tell you exactly what we have and what we don't have? So everybody gets this inside information on each other so that we could all help each other to not crash the market and potentially crash the market and get, basically save ourselves. And I think the lawyers will go over that intently to figure out if there was a verbal contract and did Goldman and Morgan Stanley get out of this verbal contract. So now Goldman and Morgan, what they probably did was the reason people pick you wonder, why did they pick Viacom? Why did they pick this? Because remember, they own the stock and it's a contract. And until they sell the stock, really, there's some money going on. There's probably money going back and forth as the stock moves. But if there was money owed to, for example, I'm Goldman Sachs and I have a Viacom swap with Bill Wang, and I'm up $1 billion he's up $1 billion on the swap, but I own the stock. I'm up $1 billion. Well, I'm going to want to take that gain. That's the first swap I want to get out because I want to take that gain because I don't want somebody else to hurt that gain and then everything else is down as well. So I want to take that gain and hopefully take the gains that I have on Viacom that I would owe him now, actually use those profits against what I'm going to lose over here. So they pick and choose which one they want. So the ones that Viacom, it was likely that these guys had heavy winners. So whoever was first in Viacom to put on the swap, maybe it was Goldman and Morgan, and then afterwards it was Wells Fargo. And then as the stock went up, he wanted more leverage. And he says, go to UBS, go to Wells Fargo. Those guys, they bought it all at the top. The last person in, which is probably like a Nomura, because they don't have a big prime brokerage, they come in at the end and literally they get killed because they're the last ones to sell. They take the brunt of that loss. You understand what I'm saying?
Yep.
Right. So Goldman is like, in a way, the risk management, the guy in the meetings, that they're smart, right? They're looking at it and going, we got to get out of these 5 names because we have profits in those. And on these, we're going to get killed anyway. So we're going to take that profits. And now they might get sued because they did that. Maybe there was no agreement, but a lawyer is going to look at that and say, the minute you walked into that room to see inside information from everybody else, in a way it was binding, and you should have known it was binding, and should have known that you were colluding now with everybody else, and you stepped out and then just actually used that information, which is inside information, right? You used inside information. So I don't know if they signed anything. You don't know, but sometimes it doesn't matter. You sign something, they still just blow it out because, the question is, do they have care and love for each other? Why would they hurt each other? These guys are slicing each other's throats to get the last business on Wall Street, right? So
Right.
they if you go to the CEO, what's his name, the DJ Solomon, you get Goldman Sachs DJ David Solomon, you go say, hey, potentially we lose $2 billion, or we could just not be friends with everybody. They say sell
Yeah.
everything immediately. Like the minute you hear what, sell it.
Mhm.
So I think that's a backstory, the inside story. I think the SEC is looking at that. I think lawyers are looking at that. I think the people holding the bag are looking at that intently and saying, hey, we gave you information, you use that information, and it was a binding contract. I don't know if that holds up in any court, but it seems like that was, you could say, smart move by Goldman and Morgan Stanley to strike first.
Right.
But nonetheless, it's really interesting. That leads to, what did we do yesterday? We had some trades yesterday that we talked about, and we can look at them. I mean, like Viacom, these are interesting trades to do when you're trying to shift around risk reward. The stock is up 2.5. We were doing a trade yesterday that was trying to sell the wings. So I was offering you something to think about, where you would sell the wings, which is the way out of the money puts and the way out of the money calls. Okay, because people at that point were worried that was more to crash, or they were looking for a very quick, sharp bounce back. So you sell that to them because it's well bid up, and you're going to buy that. You're going to buy that middle one, but everything should offset each other. And as things calm down, and this thing, if it starts just trickling back towards 55, 60, you're going to make a lot of money on that. So we were looking at the 50, 70 in, what do we say? I think we said June. We were looking at the 50, 70 in June. So it's about 540. I believe it was this one, 540 and $1.30. So it's that 410, 540 and $1.30, 410, and selling the 35s at, let's call it $1, $1.15, call it $1, $1.10, 410. So $3 up a little bit, but I think we would pay $1.03. So you're up $1.40. I mean, look, you're up almost 100% on what you laid out, taking on the risk of buying the stock Viacom at 35. So that was a trade that stock doesn't have to move much, up to $2.50, and literally 175 turns into about $3 overnight. So these are the types of, and part of that is, yes, it was, you were long, but part of that is also that the wings came down a lot. The wings go down. Okay,
Right.
The volatility comes down, which you see here, volatility. So you could have looked at that on a number of trades. I mean, you could have looked at that on Discovery, same thing, VIPS, TME, GSX, all of these, and some of them are even popping up over here in the volume, on the unusual volume board. Viacom here, Baidu is another one. Tencent, TME, GSX, these are all Discovery, same thing, VIPS, all volatilities should have been getting crushed here, because if nothing happens, then people, the movement up and down, people start saying, okay, things might be over, and they start crushing the vol. So that was a trade. It doesn't happen often, I think, but they're great setups when the stock is very sharp drops, or I'll show you a situation maybe later if we have some time on a couple of names. But that was yesterday, and I think in those situations, look, I don't think you're going to make. I think going for the home run is tough in those situations, because you're not sure if there's another leg down or a leg up. But finding those spreads and things where you could just relax and say, I could just sit here for a month, and this $1.75 could easily turn into $4 or $5. That's not a bad trade.
Yep, definitely.
Okay, good.
I love it.
Good.
Let's jump into GM. What do you say? Yeah,
GM.
Sure, GM. We love GM, and I've seen some doubling down in call buying. So
sure. So GM is. Look, the EV space is under a lot of pressure. I think the market is looking for names that like GM that have substance, that have real businesses with real revenues, real earnings, doing a transformation, and it has good management. So GM is right in that wheelhouse. The stock is trading well over the last few weeks. Let's just look at this. So clearly, I would say 46 to 50 is a little bit of a pocket here, but these are levels. This is a level right around 56. It looks like it tried to come through. The 50-day moving average is moving higher. And then you got this 62, I guess, which is interesting again, right? We see 62, 56, and 50. So again, symmetry sort of working its way up. They've been buying the April 60 calls here in big size over the last 4 or 5 weeks. At Options Geek, we're along the June 50s and the June 60s. It's the only trade we've ever had 2 open trades at the same time. So I know some people might have taken the 50, some profits on the 50s already, but I think this is a big winner. I'm expecting announcement. I think that she wants to make an announcement. I think that'd be great for the business. But they got a lot going on there. What are we seeing in GM?
In GM, call buying in April and May. More in May.
This is call buying here. Maybe. Let's see. The open interest is 34,000. So the first thing that pops up in my mind, just to make sure everybody sees the process, is okay. I see that this is down. This is up a little bit first. Okay, just as a overall picture. I see this. I don't pay attention to too much. A lot of day trading here. Okay, maybe April's the 23s. I know there's a lot in the 60s, and I see that it looks like somebody actually might be selling these. I don't know, but someone might be selling these. And then I look at the Mays, and let's see what's going on here. I know this looks like might be opening, but let's just kind of see what's going on. So the April's, looking at this one, I'm going to lean towards somebody selling it. So it's a spread here that I see. It does trade on the offer, but that doesn't mean anything. When it's a spread, you got to be careful because it could mean that it traded right near the offer, or the offer. Also, the stock could have been moving at the time, and they could have been doing another part. The other leg is also important to look at. So it's not always, when it spreads, it becomes a lot harder. This doesn't matter as much. This becomes a lot harder to determine what exactly happened. So knowing the back history that everybody's already long the April 60s, maybe that gives us a little bit of a clue. But the May, let's look at the May. That was around, what time is that? 10 o'clock? Right around 10. There's a 10:39 too. Yeah, 10:39 just changed. So 5,000. So these 5,000 spreads, they look like this is the bigger number. The bigger, looks like was that the bigger amount? When it's 1-to-1, it's a lot easier. So the April 60s, how much did they cost?
120.
Gotcha. Okay, so April 60, 120, and these cost a little bit more. So I would say that he's actually probably selling the 60s. Thinking what is he thinking? I don't have enough time, right? I'm running out of time here. There's 3 weeks to go. The market's just hanging out up and down 0.5% every day, it seems like. And this is not really helping me. So I need to get out of my April's 3 weeks. I still like the name, and I'm going to start buying the 65 calls. I mean, this is telling you how high he probably thinks this thing goes. And so, remember when they bought these Aprils, the thought was why April there was no event. And, we were looking at the event clearly, and we want the event because that's when the CEO is going to speak. And so, to buy the 65 calls, 6,000 times, and there's something here. This might be also someone selling here. 72, you would think. Yeah, I mean, that's sort of what they were thinking. 72 to 74. Gotcha. Okay. So 72, 73, 74. Let's call it 74. $74 to buy the 65 calls, here. And it's a little bit out of it's not in the exact picture. I don't necessarily like that, but I see what they've been reaching for these and been dead right for a while. So I'm okay with them. It just feels that somebody, when you're buying 30,000 of the April 16s, with 4 or 5 weeks to go, and the stock was trading, let's call it 52, 53. It feels like someone knows something. They
Right.
were coming into the Aprils at 5,000 a clip. It feels like someone is, got an inside scoop on something, whatever that might be.
Hmm.
In this case, I'd rather just go for the time, because a lot of these times they hear something, but it's not going to come out into earnings or maybe another month, and you can be dead right, but have the wrong option. So buying a little time often helps. In this case, now they're looking at the 65s, which when they paid for the 60s, they were paying for the 60s, they were paying, I think it was like a buck and change as well. And that was when the stock was 52. They were thinking, we were saying something like 67, 68. They're still thinking that range, 67, 68. Let's call it now 72. So they're moving up as the stock is trading well.
I see.
Make sense?
Yep. Yep.
So I just, they keep coming after these upside calls, expecting something. Maybe she says something in earnings here, and the something could be a spin off or a split off, or just segregating the business differently internally within General Motors. That could be something that'd be interesting to the market, so that they could actually see and value it a little bit differently. But obviously still talking positive about their transformation and pushing along. It also just might be that they're taking in a lot of money, because all the other EV names are just getting destroyed, right? The whole ecosystem of EV is under a lot of pressure. All the other
Hmm.
imagine the billions of dollars that were going into all of these small little names that we've been talking about to be
Right.
careful for the last 4 months. All that money's coming out, and the institutional money, at least the fast money, Momo money, and now it's looking for somewhere to park it, which is, okay, let's park it in something like General Motors.
Hmm. Yeah. Yeah.
Is that
That makes
fair?
sense. Yes, definitely.
Okay.
Definitely.
So GM, it's continued call buying in GM.
Hmm. Yep. Let's look at silver now. This particular name,
Silver.
Wheaton Precious, I think, WPM.
Sure. So silver, gold. I mean, silver is obviously a Wall Street Bets name. This was the big Wall Street Bets move here. It's been trading poorly, along with, that's the silver ETF, along with GLD.
Hmm.
I think people like it in this area. People are starting to, you're seeing more and more of like the silver and the gold names pop up a little bit, even though the metals aren't trading great. So it's a little, where are the buyers? The buyers, you expected them to be, as this move came down. Let's go a little bit further. This was a V here. You're expecting them to be, and you do expect them to be somewhere around here, 157. Um, that's where coronavirus was, up, down, kind of traded sideways for a couple of months, and now we're here again. So I think people are taking shots here on gold and silver, even though they're not trading. Silver's not trading necessarily that well. So what are we seeing in the in Wheaton?
Yeah, Wheaton Maze.
WPM?
Yes.
WPM. So WPM, yep, May. I see that. It's a big trade for Wheat. This is a big trade for Wheaton.
Hmm.
Hold on 1 second. Open interest. Just want to see. Yeah, I mean, this is the biggest trade right here, which is
Wow.
the June 5,000. So 30,000 calls in Wheaton is pretty significant. The stock is traded straight down. So why are people buying Wheaton? Let's see. And people have been calling for this silver rally for a little bit now. 57 to 34, 35. That's 22. 22 is 35. Gets us down to 35. Yeah, gets us down to 13. Interesting. So I just trying to figure out like why maybe somebody is buying this.
Hmm.
And technically, if you look at technically, we talk about the Fibonacci retracement. Um, you just take the low right here, the low at
Hmm.
14 and a quarter, up to 57.33, and you see the 50% retracement is 36. See that? So
Nice.
people
Yep.
generally tend to buy this 50% retracement, and they also, if it misses, they'll jump in at the 60, 61.8, this one. So they're looking for a bounce, and then they got this little bounce, and the thing's trading well here. Maybe it turns a little bit towards the 45. So it looks like an interesting place to get
Mm-hmm.
long. Look, silver is a commodity, right? The commodity goes up. Let's do the same thing with silver. The commodity goes up. These silver miners, it, they make a lot of money, a lot of money. It's like, again, like printing money with these things. Let's go here just to see silver's run up. %50 wouldn't even be back to 19.5. So they're looking for this quarter and for it to hold this 22. This was a disaster here for
Mm-hmm.
that got people long, and then it gets stuck and it goes down. So that was that's not a good that's not something positive for that silver, that movement there. But let's see where, if you're buying these things and you're paying, let's call it $1. It looks like they're buying it. Let's just check. Yeah. So here's the vol. Vol's up 5 points on the day. Vol's up. Stock goes up, and then it looks like they've been buying it continuously throughout the day. So wheat and calls. Um, if you're buying these for $1, call it $1.50, $1.65, $45. So let's call it 48. It's too much. 46. So call it
6-ish, yep.
46. So 46. So you're looking at 40 paying $1.60 for 46, which is about 250%. They're looking for 300. So it makes sense to me. It makes sense that they're targeting 45, 46. And where were we? We were at the Wheaton. Sorry, I'll keep it up the next time, because 45, 46 is sort of where you can obviously see these two spots
Mm-hmm.
right here. It looks like it gets into trouble. So let's just call it.
Nice.
So you have here one, it breaks out, holds, breaks down, does this dance around this, eventually breaks down, and then twice up here. So look, if they're buying these they're buying the 40s to see it get back to this level.
Mm-hmm. Yep.
And you got this 50-day Fibonacci right around here. So they're taking a shot coming from here to here. That looks to me what's actually happening. I'm sure fundamentally, if silver does well, that these guys will print money. So I think I think it's a little bit more technical, and they're looking for a bounce in silver and setting up for a move in potentially silver and gold. Could also remember, we talk about Bitcoin, and Bitcoin is a store of value now for a lot of people, and even institutions are coming into Bitcoin. So if that story changes a little bit, then you have a lot of that, billions of dollars that are hiding there come out of that and potentially back into, say, gold or silver. I don't know if that's the case, and I don't know if that will happen, but I think, when you think of silver and you think of gold to get a good move, you're thinking of this store of value. Will it actually, will it actually keep your money safe when everything else is going to hell and high water?
Right. Okay.
Cool.
Yeah.
All right.
Yeah. I
Good.
like it.
Yeah.
Nice.
WPM.
Let's get one last one before I have a question for you, and that's BILI.
Sure. BILI. Okay.
BILI. Yep.
What do we got in BILI?
Uh,
BILI Chinese ADR. So probably bounce a little bit today, I guess. Bounce. All these ADRs are bouncing. Yep, up 3%. Not that much. I mean, stock's gotten drilled here. What are they doing?
they're looking at June 105 to 120 calls.
BILI June. So I see IV down. Doesn't maybe down a little bit. 105. Okay. What is this? So open interest here. I just want to see. My inclination immediately is when I see the open interest that, and the stock is down, that they had bought these calls, and now they're selling them. So I just want to try to see if that's the case. Not going to be able to tell. Okay, so it spreads, but it looks closer. 59, 58. It's about flat from where it was. The IV is about flat from where it was. And let's just look at this one. 60, 59. That's up a little bit more than yesterday. So I would suspect that it's buying that call spread. Again, always hard to be exactly right, but the key is basically coming here, looking historically. So you go get the data, you look historically, and you say, what happened here? How did 2000 come here? So if 2000 were bought here, okay, then, say on March 15th, someone came in and bought 2000, then they're selling, and that makes sense there. So now they're buying, selling, and if they're buying, selling, it's likely that they are selling this one. Likely. Don't know, but likely. No, it looks like they're buying this one too. And it's not a spread, so maybe this is a different trade. It looks too much like it could be the same trade, and I see 157 vol 64. I think just because it was on the ask, that doesn't mean it was actually bought, because if it trades on a spread, it's hard to print everyone exactly where. And when an institutional customer trades, he's trading on different, he's trading, he's not all trading everything on the bid or everything on the ask. There's things right in the middle. Some parts of trade might be on the offer. The others might be mid-market, closer to the offer. So, and if the stock moves a little bit, it would appear to be on the offer. So it looks to me, I'm going to guess here. I'm not super confident, but it looks to me that someone was long the 120 calls to start. They sold those to buy. They wanted to shift it lower, to shift it to the 105s. Okay. They're putting up $4, $5 more in premium, call it $5 more in premium. And then what they're doing is they're selling the 90s at around 4 3/4 or 490 at the time, whatever it was, at just to make that adjustment. So they do that for free, and they're basically taking the risk of, we'll be long BILI at 90. So if that's the case, they're giving you confidence that, you know what, we'll buy the stock at 90. Okay, we like that. We have value at 90. So that's what that's telling you there. So that's a positive thing for BILI, where someone institutionally saying, I'll buy the stock at 90. It's 105. They're doing this trade to sort of get in the game here. Is that fair?
Yeah, definitely.
Yeah, that one's good. It's, remember, that type of trade is very similar to what we were talking about, the Viacom, the Discovery, VIPs, the TME, and the GSX. It's same type of thing, and this is risk reward. We're in a risk reward, reducing risk type of environment, where you see the trades that are coming in are all about either selling out their rah-rah calls that are just not happening anymore, or they are doing these types of strategies, which is a little bit different, takes some more capital, but it takes the middle out of it, right? It takes this range in the middle out of the equation, and it allows people to sleep at night saying, you know what, I have no idea where the market's going, but if it gets here, I'm willing to buy it. And if it bounces from here, I'm going to get 4 to 1 on my call spread. That's brilliant, right?
Nice.
I can do that trade all day. So if you have the money, these are the types of trades where the risk reward, now you can actually shift things around, and it really works well. Really, really, in this type of environment, really works well. So that said, what else you got?
Okay. All right. Now, before I jump into this question that you owe us from yesterday about the Porsche, guys, make sure you like the video and subscribe if you haven't. All right. So you told us you're going to tell us a story about
the
a
Porsche story. Okay.
Right.
So the Porsche story, it's actually a great story. It's a great business story, business sense story. So I was, I had to be, I know I had to be around 26, 27. I had gotten, I worked for the boss, and then there was the big boss, and my boss was pretty cool, good guy. And, but the big boss was the guy that signed off on all the bonuses. I had a great year. It was my first big year, and I was getting a very sizable bonus. So imagine, 26 years old, sizable bonus. And I'm thinking, okay, cool. So I got my bonus. I was super excited. It was probably the most money I'd made ever seen in my bank account. I'm at the time 26, and thought, wow, this is great. I made it. This is awesome. And in this high, the big boss, so the boss, we were on the trading floor, so everybody sits, no matter how high you are, we're all sitting literally like side by side. And the big boss, comes over, and I didn't really talk to the big boss. So the big boss comes over, and he's standing. He knew how excited I was, because I was one of the big producers that year, and I really got out of my shell, and I was doing great. So he comes out, and he's only 5 feet away from me, and he starts talking to us, and he'd always talk to us. I would always stay quiet, but he's talking to us, and he's saying, my wife, he was talking to a trader who had probably a Lamborghini, and they're talking. He's like, yeah, I bought the Porsche. It was like this very special Porsche that he bought, hooked up to the nines. It was like, the Porsche collector's item. and nobody, there was probably like 5 in the world, probably this guy, 5 in the world. And so he says, and my wife wants me to sell it. She doesn't want me to have it. She thinks I'm going to kill myself. So I'm just sitting there and like, I'm watching, like, a young kid just made a lot of money, and he signed the check, and he's like, yeah, so she just wants me to sell it for me. So then he's like, he goes, and he says, Felix, I was running. He goes, Felix. I was like, I kind of step back. He goes, Felix. He goes, you have a car? And I'm like, oh God, I see where this is going. I was like, no, I was lived in New York. I was like, no, I don't have a car. And he was like, why don't you buy it? He just paid me a lot of money, and he's like, I'll give it to you. I think he paid like $450,000 for it, and he was like, I'll give it to you really cheap. And I was like, at that moment, I had, he just literally paid me a ton of money, and I said, I just remember what I said. I just felt. Then everybody laughed. I said, I don't know how to drive stick. And then everybody was like, dude, are you a man or you're like a mouse? Like, what are you, like? You don't know how to drive stick? Like, and I'm like, everybody's laughing at me. And then John's like, well, just learn, just learn my book. I mean, what do you mean? Just go learn. I'll give it to you. What do you want? What do you want to pay me for it? I was like, nah, I'm cool. Right. And the look he gave me was like, he just looked at me, and he gave me that look of like such disappointment, like such like shaking his head, walking off. And the boss, now that was the big boss, the boss next to me just looked at me and said, he just looked straight ahead, and he just said, hey, advice for the future. If the big boss asks you to buy anything, you just say, where do I pick it up? You say, yeah, no problem, boss. Where do I pick it up? Like, throw it out, throw it in the garbage if you don't want it. But you buy whatever he says he's asking you. He just paid you all that money, and and I'm like, but what am I going to do with it? He goes, throw it out. It doesn't matter. Like, so that after that, it was like, I missed my one shot to tell the boss, yeah, I'm a player. I made it into the game. I'm a player. You want to sell me a Porsche? Yeah, I'll get a Porsche. Matter of fact, take a Porsche. Anybody wants to drive? That's what I should have said. I should have just said, yeah, what do you want? Put you on cash for the Porsche? Go get your cash right now. I missed that one opportunity, and it showed right there. It showed he's still a kid. Yeah, he doesn't know. He doesn't know what, how much money there is in this game to play. And I just thought, oh man, I messed up. So that was the Porsche story. That I never bought the Porsche. Could have got a huge discount on it. I asked him. Then silly me, I think I asked him how many miles. Like I was gonna actually buy it. I was like, how many miles? He's like 8 miles. He goes, I literally bought it. It's sitting in my garage, and I took it around the block. And my wife thinks I'm gonna kill myself. So it's very very, very funny. It was just a little anecdote from Wall Street and how the dynamic works, and being young and getting a lot of money. I mean, I grew up in very modest beginnings in Queens. You see that much money in your account, wow, like I'm not going to just give like a portion of it to like buy a car that I don't need. Like, what am I? Plus, it's after taxes. Like, what am I going to do with it?
Right.
But the big boss said, he said, if he tells you to buy anything, you buy it, like on the spot. You just you leverage it. He was brilliant. I mean, smart manager. He wanted everyone leveraged. So with me, it was a Porsche. With another guy, he was talking about a Hamptons house. The guy sitting across from me, they were making 10 million. They were making 10 million, 10 fives, 10s, and it's like they were talking about houses, Hamptons house. Yeah, why don't you go buy a Hamptons house? So you had to buy it, right? If you wanted to be in that clique, you go to Hamptons, you're not sleeping in my house on my floor. You got your own house. I pay you enough to have your own house. So but what did that do? It made, look, in the Wolf of Wall Street, in the movie, he says, like, you want your guys hungry, right? You know how you get hungry? I'd say it myself, when I eat pizza, I want more pizza, right? When I eat like a pie of pizza, forget it. I'm like, every week I'm like asking my wife, can we get more pizza? You get hungry, right? Same thing with money and toys. It starts with a car, ends up with a house that you don't need. You're just buying it because you want to be in the circle. You don't have a house. You're not sleeping on my floor, and you're not taking a 3-hour ride back to the city. So this is the game. Fun. I mean, it's fun. I have so many stories, I don't know if I could tell 90% of them, but I have a lot of stories and a lot of fun times and laughs, and we still laugh. A guy just called me the other day, and he goes, remember that time? And I said, yeah, I remember that time. I remember those times. So, it's very, very, I think it's a different world now. And for me, for sure it is, but great time. So the Porsche, that's the Porsche story. Okay, let's
Nice.
get
I
back to
love it.
business.
I love it. All right.
So let's talk about, speaking of Porsches, how about, here's something that I think is interesting, because we're talking about, instead of in times where there's no UOA, let's just talk about ways to play some of the names that we like and that we're talking about, or some names that we maybe don't like. Like, for
Mhm.
example, let's look at Tesla. We've looked at Tesla here for a while. We're not many people were saying Tesla's going to 500 when it's trading 800. It's not many people saying that, and we got this huge move. But I guess the question what happens is, we're asking ourselves, what happens down? How do we play it? After a move like this does a lot of damage to a stock. This again was, maybe this wasn't real demand, fundamental demand. Maybe this was demand just because the indexes had to get in, right? So this is an important, I think it's a very, very important area. 400 is a very, very important area to where the stock probably has this, X marks the spot target, where we're right around
Mhm.
here. X marks the spot. It's this to me is very important. Now it's going to take, this is looking like 6 months. So how do you play something? You're long Tesla and you're thinking, you know what? I'm long Tesla. This is bad. This is, we got this group of people up here, who are trapped to some extent in the name. Okay. And, is it going to go straight through to 1,000? I don't think so. You got the MACD turning over here. Usually the MACD, look how close it is here, right? The MACD and the, you're talking about this wide. And then over here, you're talking this wide. This thing is, look how wide it is over here, right? It's pretty wide. You're talking about
Mhm.
300 points there. 250 points. Is that right? 200, yeah, 270 points. So you have the MACD turning, 50-day moving average. I'm sorry, 50-day moving average turning. You have the MACD all the way down. That's not terrible. This isn't terrible. This is sort of saying a lot of the wind has gotten taken out here. But I don't like this. And then, how do I do it right here? I don't like this move down, this move up, and now it's starting to make a move down. Like
Mhm.
you're looking. I'm looking at this ABCD type of trade where this is 875 to 550. Let's call it 3.25, 3.25 to 7.25, 7.25 minus 3.25. That's 400. That gets you right to 400. Okay, so you see that math? 875. Call it five and a quarter. What do you say? 5.25. 550. So that's 3.25, less around 700. Okay, so that's seven and a quarter. That's about 400. Either way, you're around here. So you just A, B, C, D. This is Elliott wave. So you're looking at that. It's got to get this through this 200 day, and this is sort of, see where the 200 day and this sort of line right here is meeting. So
Mhm.
500. So you have this 500 level, right? So you
Right.
got a lot going on. You got these people stuck. Let me take this over here and erase this and erase this. Um, and you're on the right side, what looks like on the right side of the mountain here a little bit. So things get a little tricky, but I think this is a really important spot, 400, 4.25. So that being said, can it move up back up to 800 first? Of course. Earnings are out in 4 weeks, 5 weeks. So let's take a look at the options. So I would look at Tesla, and if I'm long Tesla, and I like Tesla as a stock, okay, so I'm
Okay.
long Tesla and I like it, and I think because I think it goes to 1,000, 1,200, or 3,000, like Kathy Wood thinks, then I would think about because I'm concerned about this 200-point drop here, okay, and I would think about playing something maybe in May. I wrote it down here. The May. First, I'm looking for the upside. So on the upside, I'm going to say, probably somewhere in the middle here, 800, 8.25, it can get to, that before really it, starts, people start selling it up here, all these people that are long. 800 at 850, somewhere there. I'm thinking about sellers coming out. So I would look at Tesla, say the maze. I get the earnings. But I don't want to be long stock here at 620. So I get the earnings and maybe I play the 720. Let's call it 720, 800. I wrote 720, 800. So let's call it 13.25. and 720 is 28 and 3/4. So 13/4, 28 and 3/4, that's 15 and a half. So 15 and a half bucks is going to cost me for the 720, 800. 15 and let's write that down. $15.50. And then for the 4, I want to sell something. So I think 400 is a level it can probably, come down to. But you at some point I got to figure out where, do I catch the exact bottom? Do I catch it? Does it go further? Well, it's a big move. You're talking about big move from 620 to 400. So in the next 4 weeks. So maybe I use the 450s or I can use the 475. So I use the 450s to sell. Okay. So now I'm selling 11 and a half. So it's 11 and a half. So net, I paid $3 for this structure. $3. If it goes down, I'm going to be long 450. Okay. I'm going to be long Tesla at 450. Okay. Less $3. So 447. And if it goes up, I have an 80-point call spread that could be worth $80 and I paid $3 for it. So 80, 77 divided by 3 is how much? 25 and 3/4. 25 and 3/4. So 25 and 3/4 to 1. That's my bet.
Wow.
It's not bad, right? It's not bad. $3. Is that right? 3 into 70, 77? No, that's 25, something like that.
Yeah, 25-ish. Yeah.
Something like 25, 30, 25, 66. So about 25 times. That's incredible, right? That's
Really
that's
is.
So that's what I'm talking about when we say managing risk and trying to find opportunities using options. It's not always that we want to just use you away with options and whatnot, but there's many different ways. And in the coaching, I try to help people see different ways like this. Like someone says, I like the stock. And I say, well, if you like the stock, why not do this trade instead of the stock? Because you're concerned about this. Well, the market's not acting well. And we're concerned that the market falls apart for 5-6%. And you don't want to wake up and say, oh, you know what? I'm going to be down all this money. You know exactly where your points are to buy and sell. You can watch the earnings. You can watch earnings with a little bit less anxiety. Tesla could be up or down 200 on earnings. Well, here's a situation where if it's down, 200, I'm not losing 200 points. I'll be down 50 points, but I'm not going to be down 200 points. And if it goes up 200, well, then I'm going to make 77 out of the 80. And, I only laid out $3. So these are types of things where I think make sense. The anchor is that you have to like the stock. You have to want to be long the stock. That's the anchor. Okay. You have to go on. Then you can sort of get that upside leverage. So now the other one that I want to take a look at, is AMD.
Okay.
Because this one is nerve-wracking. This one, AMD, people like the stock. I mean, I like the stock. I don't know why. It's so heavy here. Okay. We've talked for nauseum about all the call buying that was done here. I was interested even up here. The problem was with all the call buying, they were thinking 110, 120, 130 even with the calls they were buying. So, just to give you an idea of where the thought process was just 6 weeks ago. Now you could see there's puts in the 70s, the 65s. People think the 60s. They think if this thing breaks 74 here, the stock is a little bit in trouble, right? So if I look at this 74, 94, that's 20 to, let's call it 84, and then another 20 down to 64. You see where we're going here, right? And you see that there's this, we always talk about these gaps, and the market likes to fill those gaps over time. So we have a situation here that, I always tell you let's erase this one here. I always try to make sure that, in this here is a very strong line. The fact that they brought it down sharply here, and then they pushed it back. It was a rejection here. That was really positive. It's down, the next day down, and then shot back up quickly over 7 days. Now it's like dribbling down over 10 days, and it's hanging around here, which is not a good development. You never liked this. Wasn't even a good development, but it was the first time, and eventually took it up. This was a day and a half where it took it up. This here, a day and a half took it up. This, it's starting to get 4 days. We're hanging around 74. We're hitting the 74, 75 range. That's telling you. Here's how you look at it. You have to say to yourself, if everybody in the world could see this line that we're drawing, right?
Okay.
If everybody could see that line, what do you think everybody in the world is doing? They're buying against this line. We're all buying. We're all thinking you got to buy it against this line. And what do you got to do if it falls through 74? You got to sell it. So if a lot of people are looking at this, and this is how you got to think, by the way, you got to think there's people buying it right here, stopping themselves below 74. And if it does that, that's how you get these large, quick moves where it's through 74, trades 72, bam, trades right to 62, 60, and then shoots back up. And then you never see it again. It just does. It goes up for like the next 3 months in a row. It's starting to feel more and more like the market wants to do that. And I'm sure if you've done any trading in your life, you understand the buy here. Okay, I'm going to buy some more here. I'm going to buy some more here. I'm just going to double down here, triple down here. And then what happens? It does this final move. And it gets everybody out, including probably you, probably me, probably, because you're getting too big and the P&L is getting too big on the loss. You wind up selling. That's where the big volume comes on the sell. You wind up selling. And then the stock just takes off. And it's like you never see it again. Then you don't want to buy it up $4 or up $3. And you're just sitting there like, what just happened? It feels like getting mugged on the corner. Like someone just took my wallet and just is gone, and it's the worst feeling. So, that's what this AMD is starting to feel like. I'm looking at this going, this is just starting to feel like it's nerve-wracking. So how do you play against that? Well, here you play against that. So if you're looking at that, if you're long AMD and you're saying, okay, I'm long AMD, how do I actually buy AMD or get long AMD without feeling this, what inevitably happens all the time, right? So, how do I get in there and watch his earnings? Well, if AMD is so good or the chip shortage, relieves itself and everything starts going gangbusters again, then, May 21s, let's look at the May 21s. It gets me the earnings, and the May 21s, are, let's call it, there's some open interest here. There's some volume today too. So, the May 21s, you can do the 80, let's say 77 to 80, one of these, and then sell like the 90 calls. So maybe the 77 and a half 90 call at $3. That's what's three to make 9.5, right? 3 to make 9.5. So 300%, 315%, 316%, right? So 316%, not terrible, right? And it gets you out of your stock right at a point where this is a level. When we're showing this level is volatility. I call it a pivot line. People call it whatever they want, support, resistance. I call it this pivot because what happens is that there's going to be a lot of stock that changes hands right around here. Drops through this, you're going to see these volume. You're going to see a volume day like this. A lot of stock is going to trade hands. And so people are going to pivot. People are going to support, resist, whatever you want to call it. That's what I see. I see an important line right here, volatility line, which means volatility will increase because the stock will have a significant sharp move if it starts breaking here with good volume. So instead of living through that, why not just, even if you want to do it 80-90 at $2 is 4 to 1. So 400%, 80-90 is not terrible either, right? Because if it goes up, it's supposed to go up what? Is it supposed to go up $2? No. If people think it's going up, it's supposed to go back towards the 90, this area right up here. So, this is the type of trade that, again, when I was working and I'm looking at the board and I'm seeing this, I'm calling up the top guys, the top holders. You're looking at and we have a phone number to all these guys. You're calling the top holders and you're saying, take a look at this trade, like, adjust it here, get out of 1 million shares and buy these call spreads for 10,000 times. And, just call it a day until AMD circles back. It's not AMD. And I would show them, AMD is right now is not Intel, right? Intel is, Intel is doing what? Intel is doing
really well.
This, like taking off with the new CEO and everything. It's doing this, and AMD is doing the opposite. This is a different chart than AMD. Okay, a much different chart. AMD's looking like a sick puppy here, right? And it's hovering. This is the 50-day now, weekly average. So you break through that, you see how much room there could be here. It's look, great stock. They're going through a merger with Xilinx. It just doesn't trade. It's not trading well. It's not trading well. So that, again, something that I would look at. Where were we? The AMD. I would be pitching that to big institutional customers who are long the stock and saying, are you, especially not the ones that are 10-year holders and that they're stuck and
Right.
they're not. Those guys, no. I'm talking about the guy who's long the stock for the last 4 months, hasn't moved, and now the thing may drop. Literally, may drop $14, and that's 25%. And do you want to live through that? Like, do you want to go through that pain to have to then wait to come back? Why not just take this? It's earnings. Who knows what could happen? Stick $2 in it. You get 10 points to the upside. Or if you want 2, you can make it a ratio to 1 million shares. So maybe you do 15,000 options. So it's about $3. So you say $2-3 in this relative to what you have in notional in stock, and you get out of the stock because this is not trading well. So that's my look, and that's how I would look at great risk reward. That way, if it blows up, if it does well and everything goes great, you're going to make good money, but you have reduced your risk at a time where it looks risky. Okay, so right or wrong is not really the answer. It's not about being right or wrong. It's about managing that risk. So for everyone looking at options, we look at options. We look at UOA to take positions, but we look at UOA for the signals that tell us, hey, things are moving this way, or things are moving that way, or the big money is getting out here. It looks like there'll be a buyer here. It's important to understand that. It's important to know that. Right? We know, in my head, I know LI. Somebody thinks somebody's a buyer at $16. They believe that there's value at 16 in LI. That's in my head. So when I'm looking at ideas, I'm using that as my anchor on where something can go or not. Okay.
Yeah, that makes sense.
Good. Any questions?
We had 2 UOA questions, and they're pretty interesting, actually. If you want to take a look at Ford.
Ford, love Ford
Yes.
too. Again, just in general, another name like a GM. I like GM a little bit better just because I can understand the pieces. But Ford is just is another good name that people will flock to. They will flock to because again, it's got substance. So what are they looking at? Ford
in September.
Yeah, I see it. What's going on here? 23,000. Come on, this is a little bit delayed here. There we go. Okay, so remove shading 15. The one thing with Ford is that it's always had overriders. There's a lot of people that like to override Ford, the big money guys. So we'd have to see what's happening here. It looks like a buy. It does look like a buy just by looking through the prints. See how it traded 66, 68, 69, traded 69, 69, 71, 77, 77, 78. So it looks like it was being bought, and then a big print went up at 78. So I was probably, if it was me, I'm the trader, somebody that comes in to buy these, a customer, I'm going to take what I can on the floor, 69, 71, I take 77, another 77, and maybe I showed the price at 78 cents, so I'm stopping him. It gets to 78 cents, I have to sell the balance. So 13,000 traded 78. It looks like that probably is what transpired. But the question is, you see this open interest?
Yep.
It's also likely that this open interest was sold, and now somebody's coming in to buy it back. Could be good news. It could be something like we'd have to go look to see when that open interest was sold. Probably you'll see the same thing, like there was 20, 30, 40,000 that traded on one day, and it was maybe, I think these were sold. So I think these are sold, and I think this is buying back to close. But you have to figure out that the key to the answer is going to open interest, historical data, and figuring out that answer. Go back to that date and figure out that answer.
Okay. Yeah, cool. Fair enough.
Okay.
And one more we have is BHP.
Go ahead. B, boy, Harry, boy.
Yeah, Boy, Harry, Peter.
Boy, oh, BHP. Sorry. Commodity, BHP. All right, let's see. 18,077.5. Okay, so what I look at here, 29%, 1.2 up. Volatility was up from yesterday. It looked like that was the high today. So that high was paid at 255. It was on the offer. Okay, it was on the offer. So it looks like a buy, and it looks like it came in one shot, 17,000. But it also came in a spread. So I don't see anything else, which means that it came against stock. Okay, so you see that spread?
Okay. Yep.
16,700. So again, where's the spread? Where's the other options? Well, this is the only option trading today in BHP. It's the only option, right? So
Yep.
someone came in and bought option. When it says spread means that it could have traded also against stock. So somebody bought these calls and sold stock.
Kind of like
Okay.
AMD, what we're talking about now.
I was just about to say. So if you look at BHP, let's just try to get into the person's mind, whoever was doing this. Okay. Let's go over here. Stock has a big move. This looks like an important level, if you will. You see that over here? There's a high here, support, high, break through the high, takes off, support once, but then breaks through, breaks down. It's below the 50-day. Okay. Doesn't mean the guy doesn't like it anymore, but he's basically saying he probably bought it somewhere in here. Let's call it somewhere in here is likely where, this is usually where they start buying stuff. Or maybe even got in a little bit later after the move and he was buying it, this volume here, somewhere around here. But either way, the stock has made a significant move from 44 to 80. It's a big move. This is a gigantic move. And the question is, do I want to stick around to try to actually see it go through the 50-day towards 80? So I don't want to be long so much stock. So I'm going to sell my stock and I'm going to buy some calls just to basically leave something there. Still like it, but I don't want to take the risk that this trades back down, could easily trade back down to, so let's just extend this to 56. 64, then 56. Okay, commodities. I mean, if there's no inflation, is there inflation? Is there not inflation? If there's no inflation, then, the market's in for a big surprise. So that's what I would say about BHP.
Cool.
Very good.
Yeah, that was great. Great session. Awesome. Thank you, guys.
Good. One last thing. Let me say. I would say that if you want to look at a good chart, because we looked at two charts that we don't like, you want to look at a good chart. Man, that's a pretty good chart. That's a pretty good chart.
Oh, Google. Yeah.
Okay. See how that's holding there? That's the daily. The weekly. Okay, maybe a little toppy here, but man, on a daily that looks pretty dang good. This is weekly. Looks interesting. Now, another chart that we've been looking at. Okay, good chart. Remember, it's doing a lot of work. This is Facebook doing a lot of work here. And we looked at you could see here, big flag, down, and it looks like it's, talking about, oh, sorry. This is the daily. We were looking at this 245 range, and we were looking at this coming straight down like this. You see how this usually does this before me. You see how it breaks out. It usually comes right back to that line. See, following that line just straight down. Sorry. And now it came through, followed through. So we were talking about the 300 calls, and people buying even out to May and with earnings, looking at like 340-ish. When it's 260, 340 looks like a pipe dream. But if it gets through this and it has a good earnings number, you're gonna see a big move. You need the market. So market goes down 5%, it's gonna hurt the whole trade. But strong market spies get to 405, 410, and you get a good Facebook earnings, you could see 340. Don't kid yourself there.
Nice.
All right. We'll talk tomorrow. And Google, by the way, was upgraded today, so that's something else to think about.
All right. Thank you, Felix. Thanks, everybody.
Make sure you get people to like.
Yeah, guys, don't forget to like, and we'll see you tomorrow.